The NSE releases the final guidelines to comply with SEBI's weight concentration requirement. The weightage of 3 constituents in the Nifty bank will be capped, while the number of constituents will increase. Analysts expect inflows for Yes Bank and Union Bank. Heavyweights, HDFC Bank and ICICI Bank may see some outflows.
Bajaj Housing, that stock is under pressure following a large block deal where nearly 2.5% equity worth about 2,000 crore rupees changed hands. Promoter Bajaj Finance is the likely seller.
GMR Airports rallies as BofA Securities in its coverage on GMR Airports, buy rating, target price of 128 rupees per share. They're expecting strong earnings growth to be supported by rising travel demand and favorable legal decisions.
The Telecom Minister tells CNBC-TV18 that a relief package for Vodafone Idea could be released by the end of this year. The stock on the back of that up by about 2.5%.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and we have a red-looking screen today. The Nifty is down, Nifty Bank as well as struggling, and the breadth of the market in the number of stocks that are declining. So some red on the screen. I think the 26,000 mark becomes very important. 25,900 to 26,000, crucial support zone.
Important support to watch out for, Nigel, between 26,000 and where we are right now. Also, a lot of the stocks actually, as we speak, are moving higher. So, Balkrishna Industries, for one, has recovered a smart bit from the lows, currently at the high point of trade. IEX itself is up around 2% from the lows. For most part of today's trading session, it was in the red and now just popped into the green. So, that's another stock that should come up for you. Alongside that, we are seeing some traction building on a name like Angel One as well. But those are far and few in between because there are nearly 2 stocks declining for every stock which is advancing on the exchanges today. Let's get in Dharmesh Shah, who's the Assistant VP at ICICI Securities, for a quick technical check on the market. Dharmesh, do you think this is routine profit taking once the markets hit a record high, or do you think that maybe after the market having hit a record high, there is a trend reversal? All right, I think we've got him on a frozen frame. We'll try and repatch that connection with Dharmesh as well. Meanwhile, look at a couple of these other stocks as well. At the low point of trade is Indian Bank. That's the one that should come up for you. And alongside that, we're seeing some weakness in a couple of these mid-cap IT names as well. Persistent Systems, for one, is the one which is currently at the low point. Alongside that, we have names like IOC as well, which have seen a bit of a knock from the top. Dharmesh is back with us. Dharmesh, again, the question, do you think there is a trend reversal, or do you think this is just routine profit taking after hitting a record high?
Yeah, so good morning, Mangala. Yes, definitely, I think so. I think so. The sharp move which we witnessed in last Wednesday of almost 300 points, it looks like more of a retracement of that rally happened. So we believe this more for normal profit booking. It's a normal retracement where we expect where Nifty should find the support at in the range of 25,800 to 25,900, and eventually we should surpass the new high and should be looking for a target of around 26,500 in the coming weeks. So it's something a buy on dip strategy should be adopted. It's definitely the move which we have seen a sharp is more likely to be contributed from the frontline large caps. The mid caps seems to be looking more for underperformer going forward. But yes, definitely I think so. Large caps are the ones where one should definitely focus at the current market price.
Okay, focus on large caps. Got that, Dharmesh. And on the Nifty, where's the support? I missed that.
So support is almost placed at around 25,800. The last Wednesday low, if you look, I think so it was around 25,832. So we believe 25,800 is something the strong candle support, which should hold in this current corrective phase.
Tricky one.
25,800 to 26,500 is what the broad range he's talking about. So 25,800 is the stop loss here if you're going long. Individual stocks, Dharmesh, what do you have?
Yeah, Magana, if you look from the market, from the large cap perspective, I think so Larsen remains to be the top pick. L&T, again, if you look at the chart from the technical perspective, I think so the long 14 months of long consolidation breakout has been witnessed in L&T. And even if overall capital goods, I think so the risk reward looks more favorable from the current levels. We expect capital goods as an index to outperform going forward, where L&T remains to be our top pick. We expect L&T to head towards 4,500, keeping a stop loss of around 3,850. So L&T remains to be our top pick inside the capital goods space. Apart from L&T, Adani Port is something which we like from the port side. where again the last 1 year price performance seems to be forming the cup and handle type pattern, and the stock has witnessed a breakout above 1510. Maybe I think so what we see currently is more of a retracement of a sharp move which happened in last few weeks, but 1500 to 1480 remains to be the strong support for the Adani port. We expect the stock to head towards 1675 in the coming few weeks.
All right, we take that point, Dharmesh. Thank you so much for that. Let's get in some more ideas for profit as well. Tire companies are higher. So MRF for one is at the high point of trade. Let's see whether CEAT and Apollo follow that suit or not as well. So we have Balkrishna Industries, of course, when we pointed out at the start of the show. MRF has moved higher as well, up by almost 2,800 rupees today. And CEAT has just about spiked. And let's see if Apollo Tires is also around the higher end of today's trading range so far or not. Yes, it is indeed up around 2% for that stock too. But let's get you some more ideas for profit. We have Money Control Pros Lekha Badlani joining in with a stock.
Yes, thanks. So my stock pick is Suraksha Diagnostics, which operates one of Eastern India's largest integrated diagnostic network. Now, the expansion momentum remains strong for the company. It added 11 centers in H1 FY26 and plans to add 9 more in H2, targeting 12 to 15 additions annually. Its growth strategy is anchored in Eastern India, an underserved region with significant demand for quality diagnostics. Management's guidance of 15% annual revenue growth appears achievable, supported by center additions and the launch of the genomic vertical. While the short-term margin remains depressed due to expansion, operating leverage and maturity of new centers should drive recovery. Now, the polyclinic business with higher gross margin offers an additional margin lever over the next 2 to 3 years, with the company targeting 34 to 35% EBITDA margins over time. At a sector level, structural shifts like the rising chronic diseases, higher healthcare spend, and growing preventive care adoption provides strong long-term tailwinds. Suraksha is deepening its presence in West Bengal, which will absorb 70% of the upcoming capex. Moreover, its hub in Patna and Guwahati strengthen its position in the adjacent market. Suraksha's genomic entry is also well-timed and positions it well to capture the emerging demand. Now, it trades at 15 times FY27 estimated EV/EBITDA, which is at a meaningful discount to its peers, making it an attractive, for investment for long term.
All right, we take that point. Thanks a lot for that, Lekha. With that, we take a short break, come back, more on the markets and stock-specific action. Stay with us. Back at an index level, there has been some recovery in the mid-cap end of things. So the mid-cap index is now down just about 5% versus previous close and just about moving into the green as we speak. And even as the broader markets are indicating more stocks in the red than green, we have a couple of stocks which are spiking. Bank of Maharashtra, for instance, there was a large trade on that counter this morning as well. It's recovered from all of those losses earlier, and now it's mildly in the green. In fact, at one point it was down about 3.5%. And we have Restaurant Brands Asia as well. Now, the news here, our colleague Vivek has been reporting that the promoter Everstone is looking to sell stake in the company. And in that, perhaps, we are seeing this stock move higher. It was higher all of last week, and now, even in a wobbly market, that stock has spiked to the high point of trade. But the NSE has released final guidelines to align with the SEBI's weight concentration requirement. Vivek joins in with the details. Vivek, the heavyweights stand to lose.
Well, that's right. So, it's an important development. So, last evening, NSE went ahead and released the final guidelines to align with SEBI's weight concentration requirement for constituents in indices that actually have futures contracts trading. Now, when you're talking about this particular revised method, the top 3 constituent weights, as far as the Nifty Bank is concerned, will be capped at 19%, 14% and 10%. For Nifty Bank, the weight adjustment will be implemented in 4 tranches, starting by the end of December. So when you're talking about the Nifty Bank, end of December, now you have 12 constituents, likely to see 14 constituents as per analyst estimates. What are the key takeaways? 2 likely additions to the Nifty Bank index. Yes Bank could come in, it could see inflows of a little over $110 million. Union Bank is the other stock that could enter, almost $80 million worth of inflows could be seen. On the other hand, HDFC Bank and ICICI Bank, given the fact that they're currently above the prescribed weightage, they could see some selling pressure. Analysts estimate a little over $330 million worth of selling pressure could be seen both in HDFC Bank as well as ICICI Bank on the back of this development.
Okay, all right, Vivek, but we can't let you go at that. GMR reports as well. There's note that's coming from Bopha Securities. Run us through that piece. Vivek, GMR Airports.
Well, that's right. And interesting report coming in from BofA Securities as far as GMR Airports is concerned. They've gone ahead and initiated coverage on the stock with a buy rating, a target price of close to 128 rupees a share. They say that the company offers a strong earnings growth ahead, supported by number one, rising Indian travel demand, growing non-aero as well as real estate revenue, and also the benefits that the company is expected to see from favorable legal decisions. They say that the current valuations at 15 times adjusted EV to EBITDA is quite attractive, and this on the back of the fact that they see strong future growth. What are the key catalysts? Number one, they see consensus going ahead and upgrading their EBITDA estimates, reopening of the Pakistan airspace, clarity as far as hypothetical regulatory asset-based calculation is concerned, especially given the fact that it's currently in the Supreme Court, execution of non-aero as well as real estate strategy, as well as the restarting of divisions, given the fact that FY26 is the year when they're expected to be PAT positive. On the other hand, a few risks include Delhi's second airport they see could result in some short-term traffic disruption, and also a more aggressive approach from the regulator in terms of new strategies. So overall, positive note coming in on GMR Airports from BofA Securities today.
All right, we take that point, Vivek. Thanks a lot for that. A couple of stocks also moving higher right now as we speak. Whirlpool is one of them. Remember, last week there was a large trade of the promoter did sell stake in the company. It was under pressure. Now coming back from the lows, currently at the high point of trade with a 2.5% gain on Whirlpool. And Siemens is the other one, which too has shown a bit of a spike currently at the high point for that stock as well. What we'll do is take a short break, and as we do that, some good news for all you viewers, which is India's business news leader, which is CNBC-TV18. Its all-new app is here. It gives you instant access to breaking news, in-depth financial articles, financial world updates, all of them at your fingertips. What you can do is download the CNBC-TV18 app from either the Apple Store or the Google Play Store, or just scan that QR code, which is up for you on the screen.
Well, Bajaj Housing, that's under pressure following a large trade. Promoter Bajaj Finance is likely to have sold 2.5% equity worth around 1,900 crores. Hormuz joins us to tell us about this listing, that there was a lot of interest out there. Stock jumped away, and today the stock is down 50% from the highs. Hormuz, run us through that piece.
Well, the most bid IPO at that point of time was Bajaj Housing. Bids was almost around 3.5 lakh crores for that 6,500 crore rupee IPO. Today, the stock is down 50% from those post-listing highs of 188, made a 52-week low of 95 today. A block deal took place, almost close to 2.5% equity was sold by the promoters, Bajaj Housing, Bajaj Finance. Now, of course, they are doing this to comply with the minimum shareholding norms, but then there is still plenty of overhang that still remains for Bajaj Housing. That's because of the fact that even after selling today's stake, the promoter stake would still be at 86.3%. So that still means they still have another 11.5% stake still left to be sold. That remains the most important overhang for the stock going forward. And if you look at the IPO as well, you mentioned it was the most bid IPO. The QIB portion at that time was subscribed well over 200 times. The retail portion too saw healthy subscription for whatever was reserved for them. And even after that, the stock, after its listing from its IPO price of 70 bucks, went up to 190 and now trades below 100 rupees. So that is the key overhang. And of course, just as the stock continued to move higher, the retail shareholding went higher in the stock as well. From 16 lakh shares during listing day, within the next quarter, that number went up to 26 lakh shareholders. Today, that number stands at around 24 lakh, around 8% of the company owned by retail. Of course, mutual funds don't have a significant stake in the company. So it's only between the promoters and the retail shareholders, and this promoter stake sale continues to remain a big overhang on Bajaj Housing.
All right, Hormaz, thanks a lot for that. With that, let's go on to a CNBC TV18 exclusive. Telecom Minister Jyotiraditya Scindia has said that the government is awaiting a formal request from Vodafone Idea seeking AGR relief. But when asked about Bharti Airtel, Scindia clarified that any other company seeking AGR relief must approach the top court. Listen in to his comments.
Ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So, post that judgment, which is what is being examined within the department today, we are also waiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. In the event that they would pursue that, again, that is something that the court of the land will have to decide.
When it comes to waiving off or reducing the AGR dues for Vodafone Idea, would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
All right, and the government has also issued a notification that mandates that domestic phone manufacturers install the Sanchar Sathi app on the devices. The app will have access to smartphone data, including photos, messages, and more. Ashmit joins us to fill us in with an update on that front. Ashmit?
Well, the DOT has issued very clear directions. All phone manufacturers within a 90-day period, that's the short window, they have to make sure that this application, Sanchar Sathi, is embedded in all phones that are being manufactured. Even phones that may have already been manufactured and may be in transit, even for those devices, over-the-air updates need to be issued so that the Sanchar Sathi application is embedded in the devices. But this is being flagged by very many academicians, think tanks, privacy advocates as a gross invasion of privacy. And they've flagged a number of concerns with respect to data that will now become accessible to the Sanchar Sathi application. They point out that the Sanchar Sathi app will have access to all the files that are resting on your device. So whether that's phones, images, WhatsApp images and videos that you may have recorded, it will have access to all the PDF files on your device, all the Excel files, all the Word files. That is what the Sanchar Sathi application will have access to. That's one. Number two, it will also have access to all the call logs on your device. So who is calling you, who you are calling, what is the date and time of that call, and what is the duration of that call. All of that information will be available to Sanchar Sathi. Number three, the network provider that you're using, the network type that you have, whether that's a 3G, 4G, 5G connection, and also your call tower that you're using at that point in time, giving a rough idea of your location. That is something that also this application will be able to access. And finally, your inbox, your SMS inbox is something that, again, this application can access. So all the SMSs that you're getting, Sanchar Sathi will have access to. Even some of the alerts that the banks may have been sending the users, that is also something that Sanchar Sathi will have access to. But the DOT is refusing to budge, making it clear that this is a direction that needs to be complied with, and clarifying in that order that if these orders are not complied with, there will be consequences that will come as a result of the Telecom Act as well as the Telecom Cyber Security Rule.
Thanks a lot for that, Ashmit. In fact, let's also hear out what the Telecom Minister had to say to us on this issue.
The next question, there are reports coming in that the Telecom Ministry has asked private mobile phone makers to preload a government-owned cybersecurity app before selling phones. Now, this is for the security of customers all around the country. Has that been done? Have the directions been issued? And what exactly is the expectation?
So all of this ties in with the security of the customers. So Sanchar Sathi portal and the Sanchar Sathi app has done a yeoman service. And let me say this on television with you, and let me thank our consumers also, because the success of this could not have been possible unless there was a Jan Bhagidari approach. And it is due to that Jan Bhagidari approach that we've been able to protect our consumers. This is a step in that very direction. If you're able to load this on, then if I lose my phone, immediately that app is on my phone, which I can then register and make sure that my phone is not used by any fraudulent individual. It's a step to protect the consumers at the end result.
All right. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters with news that the markets are trading in the red. And as you can see to the bottom of your screen, the Indian rupee has made yet another fresh all-time lows. We'll wrap up, but the team of Trading Hour is waiting by for you. Stay tuned.